Welcome to the F Sharp Podcast, presented by Harmoney Wealth, a podcast geared to educate you on all things financial. Co-hosts Tanner Bortnam and Adam Henning discuss various financial topics presented in a consumable and entertaining manner. Tanner is a certified financial planner, JD, and financial expert, while Adam is a marketing professional and small business owner. It's time to harmonize. Sit back and enjoy the episode. Your future self will thank you.
Welcome, everybody, to episode 54 of the Financially Sharp Podcast presented by Harmoney Wealth. I am your co-host, Adam Henning, marketing professional and small business owner, and I am joined, as always, by Tanner Bortnam. Tanner is a certified financial planner, JD, and industry expert. On Wednesday, January 10th, 2024, the U.S. Securities Regulator approved the first U.S.-listed exchange-traded funds ETFs to track Bitcoin in a watershed moment for the world's largest cryptocurrency. The SEC Commission, or SEC, said it approved 11 applications, including ones from BlackRock, Fidelity, Invesco, and VanEck. So that is the subject of this episode, Bitcoin being approved for spot ETFs by the SEC. So with that, we welcome in Tanner to explain what this all means and kind of break that down for us, this podcast purposes, and for just investors in general, what this moment means. We're recording this, by the way, this episode on Friday, January 12th, so still somewhat fresh and newsworthy as that news broke Wednesday the 10th. So with that said, Tanner, our expert, what does this mean?
It kind of depends what your thoughts are on Bitcoin in general. A lot of people who have been in the cryptocurrency world for a lot of years. This is, it could be a really good thing or a really bad thing. I would say it's probably more or less a better thing for people if you want to have some cryptocurrency. But if you're not into cryptocurrency, then it's not a big deal. It's like another commodity. It's like if you don't want to buy precious metals, you don't really care about gold and silver ETFs. It's kind of that way. So, for any of the of our listeners who are interested in this or have been interested in this, I know we did a earlier episode. We looked this up. What was it? 2 years ago, episode 10, I think, on cryptocurrency. So not wanting to go over again what cryptocurrency is or any of that. What these ETFs, what the SEC has done to allow these ETFs to come in is really just provide more availability to people to be able to, have exposure to Bitcoin in particular. That's going to be a lot easier to purchase rather than going through Coinbase or something like that.
Mm-hmm.
You don't have to actually own the individual Bitcoins. You're owning the ETF that owns the Bitcoins. So you don't have to worry about having a digital wallet. You don't have to worry about losing your long password, all those things that are associated with a Coinbase or other trading platform where you physically own it. Now, again, there's pros and cons to that. People out there, I treat this very similar, and I brought it up, gold and silver. I treat this very similar to gold and silver. Not saying, I need to clarify this, I am not saying it's going to replace gold and silver. It's just going to operate similarly. Some people want to own the actual gold bars or coins. Some people just want exposure to gold itself. Well, if you just want exposure, an ETF is fine. If you want to have those physical bars, you need to go buy actual gold. It's going to be the same for Bitcoin. If you need to have those coins and you think, and you don't actually get the coins, but if you need to have the physical, I guess the virtual coins,
Blockchain,
we'll call them. Yeah. But if you need to have that and be in control of that aspect, then you still have to go to Coinbase or something like that to purchase it. If you are just wanting exposure to Bitcoin and how Bitcoin goes up and down, then an ETF is a lot simpler. And the other nice part that the SEC did, I will admit I don't tend to give government a lot of credit a lot of times, but I will give them kudos on this. They allowed 11 of them all at the same time. And reading up on this, what this did was it drove down the cost. So there actually were ETFs out there prior to
Futures.
January 10th. Yeah,
Yeah.
exactly. But they were future contracts or future ETFs on Bitcoin. And the expense ratios were crazy, like 1.5% up to 2.5%, 3% per year just to own this ETF. Well, now with this new um, 11 of them that are spot priced, it's much reduced. I mean, I don't know exactly what all of them will be, but you're probably going to be somewhere in the point 0.2 to point 0.4 range in expenses rather than 1.5 plus. So saving a lot in expenses to just own this, asset as well.
Sure. Yeah, I like how you explained it. I mean, in my eyes, there's three segments. You either you owned and believed in cryptocurrency or Bitcoin and already have that digital wallet, or you're on the opposite side of the spectrum where you just don't care and don't believe in it,
Hmm.
or someone like I would consider me. I do have a little bit of Bitcoin just because I wanted to see the process, but I feel like that middle segment is they know what it is, they've been interested, but they just weren't sure the mechanism and how to do it. And this is going to be a better and easier way to to invest in it and believe in it and track it and do it without actually having to hold it. So
Correct.
um,
Yep.
that's where like I feel like I probably won't invest anything further in actual the coins itself, but carving out a little part in the portfolio with this ETF, I think would be a good way for me personally, but also other investors that fit that same mold. So
Sure. And you, as a non financial advisor, can by all means make that claim. And I will just say whatever people think is best for themselves.
right, yeah. Um,
Yep.
in the day or 2 days since this filing went down, according to Reuters, that ETF saw $4.6 billion worth of shares trade hands as of Thursday afternoon. So, Bitcoin, with the speculation leading up to this, is up 3%, the highest since December of 2021. So a surge specifically with Bitcoin, but cryptocurrency as a whole after in the last couple of years have seen a little bit of a dip and just a slow in it as a whole. So, is this a euphoria moment for the market, specifically for the cryptocurrency, or is this surge sustainable, or what do you think as we kind of earmark this landmark event in history as we move forward? As we look toward the full year of 2024, what can we expect from this new ETF?
um, Other than
Put
it just making it easier for people to have access to it, that's really all. I mean, Bitcoin is extremely volatile, and the other smaller coins are even more volatile. So, I mean, as you mentioned, um, Bitcoin was up since, and there was what, 4.6 billion, I think you said, that went into these various ETFs on that first day, and Bitcoin was up that day to a high from, whatever you had just listed. Well, I was looking this up. Bitcoin's already down from that.
Yep.
I mean, it was at 47 over 47,500 as of Thursday, and it's down to 42,000. I mean, there's $5,000 loss in a matter of 2 days. So Bitcoin is extremely volatile. I have absolutely no idea where this is going to go. There are people out there that claim to do. I think they're full of it. I don't think anyone can possibly know where this is going to go. It's it's this abstract thing, and I'm not trying to say that Bitcoin doesn't have a place. I'm, not trying to say any of those things. It's It's not Walmart stock or
Right.
Apple stock, and you can be like, "Well, Apple sold X amount of iPhones, so thus their profit should be this," and like, "Okay, they're trending upwards. I can see that they're gonna make more money." This is purely what is some person willing to pay for a Bitcoin? And that's how the price is moves around. What is a willing buyer and a willing seller, where are they meeting? And it's over currently an arbitrary coin that has value, but also no monetary. No, you can't use it like a coin, and there still are some of these restrictions. Now, if it ever becomes, you know, something where you can use it a lot easier, I think the value. Well, I don't even know if that would cause the value to go up. I mean, it still is just a thing that would have a value, and then you can trade it as currency. And I think, I mean, personally, I think if it becomes a currency, it may lose some of its nostalgia of, well, I can use this to buy things now rather than I have this thing that's off limits and it's special and it's, like think of trading cards, right? If you have the
Yeah.
one up on the wall that you never touch and you never play with and you never do anything with, the value of that's a lot more than the one that's you're trading between friends and all of these, because it's, it gets so. I have no idea. I have absolutely no idea where Bitcoin prices are going to go. They've been all over the board over the last few years. And I mean, even just this year, it's been a good, I shouldn't say this year because we're in 24 now, but 23, it had a reasonably good year. Um, and, and I should say, really good year compared to certain parts of the market, but in terms of Bitcoin itself, I mean, it's had better years on a percentage basis and it's had way worse years, so it's just, I would say if you're looking to get into this or looking at the ETFs, do your homework. Like I don't remember everything from episode 10, it was 2 years ago, but I do remember saying treat it like you're gambling.
Mhm.
Only put in what you're willing, because I would tell you the same thing if you were wanting to go buy a penny stock that is a company. I would tell you the same thing if you're wanting to go buy some hyper aggressive growth stock. It's just, they just have massive amounts of risk. And so you have to, invest proportionally to that amount of risk. This isn't a CD. This isn't buying Walmart. This isn't buying Apple. This is just buying something that's extremely volatile, and you can lose a lot of money in it. Or you could make a lot of money if you happen to buy it at the right time and it goes up. It's
Yep.
either way, but you're more likely to strike out or hit a home run. Hitting doubles and singles is probably not how this plays out. Um, but anyway, just do your homework on it. Don't put in more than you are willing to absolutely lose. The ETF route now makes it a lot easier, as we've been talking about. Trying to pick between those companies, do your research on the companies, look at the expense ratio. Expenses aren't everything. The factor, companies that have the lower expense, that's a good starting point. But also, you got to look at their liquidity. Bitcoin isn't the most liquid of assets. It's not the most easily tradable when you need to get money out of your ETF. So if a bunch of people want money out because some negative news comes out about Bitcoin down the road, are you able to get your money out? You want something that has a lot of trading volume and has the liquidity. And so look into that too, between the 11 new ETFs that are out there.
Let's speak to that volatility that you talked about
Mhm.
just a little bit. According to Morningstar U.S. Marketing Index, yes, I do research for this. Over the past 5 years, the standard deviation for Bitcoin is nearly 4 times that of the U.S. stock market. So, with that said, and Bitcoin being very volatile, as you've stated, well, very high ceiling, very low floor. Could this news and this recent approval by the SEC bring a little bit more stability? Um, and I'm not really asking for a yes or no. I understand that you're probably going to say, I don't know. Um, but as we look and monitor this, could this be something we look for in 2024, that maybe this watershed moment, if we want to call it that, brings it a little bit more stable? It's still going to be probably the most volatile thing or ETF in the
Mhm.
portfolio, but could it bring stability to this
Yeah,
speculative?
I
Can you
think
even
that's
call it a security? You can't
yeah, because it's
still?
an ETF. The ETF is a
Okay.
security.
Yep.
Um, Yeah, I think that I think that's a really great point that, what you point out there is, it is extremely volatile. I'm kind of shocked that it's only 4 times. Now, again, people need to remember that doesn't mean, in small variations, it's small numbers, but if the market is going up 20%, that means Bitcoin 4 times more is up 80 or down 80.
Mm,
So it grows or up or down very quickly. So, but I do think that having these ETFs probably should bring that down, as you alluded to. It's not going to get anywhere near the S&P's, standard deviation of risk, but it should bring it down because it's easier for people to get money in and out than it was previously. And so, and you have more players in the game in terms of companies helping get access to this. Before this, unless you wanted to do the futures ETF, you were I mean, from my understanding, there was about a handful of websites you could go to trade this stuff, and so there wasn't really a lot of, competition, and
mm,
so now that there's 11 more ETFs out there, they will help, provide some of that as well. So I do think we'll see the volatility come down. I think as you said, it's still gonna be extremely aggressive, but, it is unlikely to stay up at that 4 times level.
sure. So the next step would probably be in the next couple of years, even more stability to come if we can, or the world or whomever can make this a tokenized thing and exchanges are happening more frequently. Um, so I guess the last thing I want to ask you or just mention is, um, it's pretty interesting that obviously if you watch us, you can probably gauge our age level. And one thing I would like to point out, would probably, I mean, we're not older millennials, we're just millennials. um, I think it's pretty refreshing, and this is just my opinion. Obviously, you're a fiduciary and a financial advisor, but I think most the general blanket statement or assumption is young people would be really excited or excitable about and passionate about cryptocurrency, but you're not. Is that all financial advisors, or is it just your level of expertise? You can just kind of see through the BS and understand it better. I just feel like it's a buzzword of, yeah, crypto's the next thing, and we should all jump on board. But um, and I know it's, if you're a listener of this podcast, you obviously know that Tanner is not a big crypto guy. So, um, long story short, I guess, I don't know, a
Yeah.
terrible
No,
layup
no, you're
and
fine.
way to.
You're fine.
Uh,
I'm just trying to kinda think how to answer that. I I would say it's just more of my philosophy. As our loyal listeners know, one of my, I hate to say mentors because I've never met the man, but one of the people that I try to emulate is Warren Buffett, and he always preaches that invest in the things you know. Don't try to become like, you can't be an expert in everything. And so invest in the areas that you know and don't invest in other ones. And you are going to miss. He admits that. He did not get into Apple and some of these companies early enough, and he admits it because he didn't understand it
computer, yeah,
well enough to
yeah,
do it right away. And so, were there people that have made more money off of Apple than Warren Buffett? Yes. But is there anyone that's made more money off the stock market in general? No. So I understand Bitcoin on a scale of 1 to 10. I'll say 5 to 6. There are people out there that understand the blockchain and everything behind it and how that works. And I mean, they can, it's like they're talking a foreign language. I am not at that level, so that's where it kind of, I don't wanna say scares me, but that's where I back off. I'm like, "I don't really understand this." And up until these ETFs came out, I couldn't invest it for clients anyways, so it's kind
sure.
of like a out of sight, out of mind. Now that it is available, I'm still not super high right now on it. I personally do view it something similar to, like, a gold and silver. It's, if someone wants some in their portfolio, it's part of your 10, 15% allocation to alternatives. But again, that doesn't mean that all of that is in crypto. That's the
Right.
allocation to all alternatives. And you just plop some over there and you know that, hey, this is, it's like buying yeah, gold or silver or other currencies. Some people, I don't trade currencies. I don't try to see when the dollar's going up and the euro's going down and the pounds, I don't, but some people that's what they know. So that's how they, so I would just say that's kind of where I am. I don't think Bitcoin's evil. I don't think any of that. I do think that there is or there tends to be the fear of missing out, like we've talked about, I'm pretty
Hmm.
sure on episode 10, like we talked about with the meme stocks, like we talked about with a lot of that, and you're almost viewed as an idiot because you're not getting on this bus and the bus is leaving. Well, where's the bus for GameStop now? Where's the bus for AMC right now? Those people got off the bus. They're telling everyone, get on, get on, get on, while they're getting off because they're selling you their shares for way more money than they know it's worth. But they're convincing everybody, get on, it's going higher, higher, higher. And it's not. What was the Elon Musk one?
Dogecoin?
Dogecoin or whatever. Yeah, Dogecoin to the moon. No idea where that's at. Highly doubt it is as high as it was. I'm sure
Yeah,
it's like,
probably
you
about
know,
10 cents. It's been at 10 cents for a long time.
yeah. And what
So
was it at one point?
I think
Like it.
the high water mark was like 69, 70 cents.
Oh, okay. So it is down multitudes, right? Like so
Right.
that's where I feel people can kind of get swept up. And I just say, just do your research. I don't have any problem if someone wants to put some money into Bitcoin.
Yeah, I
Just
guess that's
just do
what I
your
was kind of
research.
looking for
Yeah.
is if you're listening and if there's a situation, hey, interested, I have a financial advisor. Now you can approach them and say, hey, can we look into this, or where should we put this
Yep.
into the
Yep.
portfolio if it
And
fits?
baby steps.
Yeah.
Baby steps. You don't go in and there's some new hot stock and you just be like 100% going in this stock. You don't do that. You baby step it. You make sure it keeps going and you can keep buying more. You can always keep buying more. So,
Interesting. Anything else before we wrap up?
no, I think that's good. We just wanted to touch on it since it's, new new news. It had just come out. So, yeah, all good.
Yeah, we'll certainly monitor as we head through 2024 the volatility of it, and if it becomes a case study or sets a precedent for future cryptocurrencies
Oh,
as
well, I
well.
will piggyback on that just real quick. I
Mhm.
think since they have done this with Bitcoin, it's only a matter of time that some of the other big ones, Ethereum, I don't know what would be next after
Dogecoin to the
Ethereum.
moon.
I don't know about that one, but I expect that there will be more of them that start coming out as time goes on as well.
Right on. All right, that wraps up another episode of the F Sharp podcast. We thank Tanner for his insight knowledge. And also thank you for tuning in. If you enjoyed today's episode or this episode, don't forget to subscribe, rate, and leave us a review. If you are new, we invite you to listen to our previous episodes that we cover a wide range of personal finance topics, which you can find on Spotify, Apple Podcasts, or wherever you listen to podcasts. If you have any questions or suggestions, shoot us an email at podcast@financiallysharp.com. That is podcast@financiallysharp.com. For Tanner, I'm Adam, reminding you until the next episode, stay financially sharp.
This podcast is for informational and entertainment purposes only and should not be relied upon as a basis for investment decisions. This podcast does not engage in rendering legal, tax, financial, or other professional services. Investment advisory services are offered through Harmoney Wealth, a registered investment advisor authorized to do business in states where registered or otherwise exempt from registration. If you have questions pertaining to your specific situation, please contact Harmoney Wealth at 602-935-5155 or at harmoneywealthaz.com.